Tutorial 1 GST Compensation Law, Salient Features and Basic Terms. Here we are again with another interesting article on GST. This time we are going to discuss some of the salient features and key terms pertaining to draft GST compensation law. This impugned law has been a topic of much debate at the GST Council meetings between our honorary Finance Minister Shri Arun Jaitley and the respective finance ministers of the state. As per the latest 10th GST Council meeting held on 18 February 2017, the draft law of the said was passed. Now it will be sent to the Parliament in the next part of the budget session. Salient features of GST compensation law. As you all know, there will be three laws in GST, viz. CGST, IGST and SGST. Now, the states has the power to levy and collect only SGST out of the above three, which will directly go to its treasury. Rest will be collected and levied by the central government. After implementation of SGST, all the taxes that are currently levied and collected by the states will diminish and only SGST will be left. This will lead to loss of revenue for the states. So, to indemnify the states for such loss, central government will pay a calculated amount of money to the states that shall be based on a formula. The amount shall be the difference between projected revenue that the states would have received and the actual revenue that the states are generating right now. By projected revenue, we mean the revenue for a base year multiplied by the projected growth rate. Key terms: base year. For the purpose of calculating compensation amount payable in any financial year during the transition period, the financial year ending 31st March 2016 will be taken as the base year. Projected growth rate. The projected nominal growth rate for revenue for a state during the transition period shall be 14% per annum. Base year revenue. The base year revenue for a state shall be the sum of the revenue collected by the state and the local bodies during the base year on account of taxes levied by the respective state or centre after subtracting refunds with respect to the following taxes imposed by the respective states and centre which are subsumed under goods and services tax. Number 1. Value added tax, sales tax, purchase tax, tax collected on works contract or any other taxes levied by the concerned state. Second, central sales tax levied by the Central Sales Tax Act. Third, entry tax, octroi, local body tax or any other tax levied by the concerned state. Fourth, taxes on luxuries included taxes on entertainment, amusements, betting and gambling. Fifth, taxes on advertisement or any other tax levied by the concerned state. Sixth, duties on excise on medicinal and toilet preparations levied by the union but collected and retained by the concerned state government. 7th, any cess or surcharge levied by the state government under any act which is included in the definition of earlier laws. The following taxes shall not be included in the base year revenue. Number 1. Any taxes levied under this act on sale and purchase of petroleum crude, high-speed diesel, motor spirit commonly known as petrol, or natural gas, aviation turbine fuel and alcoholic liquor for human consumption. Second, any taxes levied under the central sales tax on the goods mentioned in 1 above. Third, any cess imposed by the state government on sale and purchase of goods mentioned in 1 above. Fourth, entertainment tax levied by the state but collected by the local bodies. D. Projected revenue for any year. The projected revenue for any year in a state shall be calculated by applying the above growth rate over the base year revenue of that state. Example, if the base year revenue for 2015-16 for a concerned state calculated as per section 5 is Rs 100, then the projected revenue for say financial year 2019-20 for years from the end of the financial year 2015-16 shall be as follows. projected revenue for the year 2018-19 is equal to 100 bracket starts 1 plus 14 divided by 100 power 4. Therefore, revenue for the financial year 2019-20 shall be 168.89 approx.